Assalamualaikum and a very good afternoon. My name is Faseha Sapwana binti Harun and I will be presenting question 1A, 1 and 1C. Question 1. Advise Nuco on the following issues from the perspective of taxation. A. Whether to choose setting up a branch or subsidiary in Malaysia. Recton is planning to set up a new company named Nuco in Malaysia in order to apply for pioneer status or investment tax allowance for its manufactured promoted products. However, the choice is between setting up a branch or subsidiary for its Malaysian operation. Since the company is manufacturing promoted products, they are eligible to apply for pioneer status or investment tax allowance. In Malaysia, both a branch and a subsidiary are generally subject to the same tax filing and payment obligations. If Nuco decided to set up a branch, the branch will not be considered as a tax resident in Malaysia. The tax benefit of opening a branch office is that, as a division of the parent company, it will be subject for corporate tax but only for profits earned through its activities in Malaysia, which will be taxed in Malaysia. The branch is taxed on the income derived from Malaysia, and it can also be subject to the double taxation agreements signed by Malaysia if one is in force with the country in which the parent company is registered. Generally, tax incentives are not available to branch. On the other hand, if Nuco decided to set up a subsidiary in Malaysia, they will be considered as tax resident and is liable to Malaysian taxation, and it must be registered following to the regulations of Income Tax Act. The company is liable to the payment of local taxes, but it is also entitled to various tax benefits and deductions. Tax incentives may be available depending on the type of activity undertaken and subject to meeting eligibility conditions. Besides, the Nuco paid-up capital is only 2.4 million, which indicates that the company is a SME. Therefore, it is better for Nuco to set up a subsidiary in Malaysia, so they will be entitled to various tax benefits and deduction. Next is question 1B, whether to commence business during financial ended 31st December 2019 or 2020. For taxation purpose, it is the commencement of the essential activities of a business that is relevant in determining when a business has commenced. The determination of commencement date is by reference to activities of a company and not the income generation. Sales or turnover need not be present for ascertaining the commencement date. As for Nuco, it is better to select the financial year of 2019, as it is better to start off the business the earliest as they can, so that the company could learn and adapt the rules that currently being commenced, and to be more prepared if there is changes in taxation rules for the upcoming year 2020. The estimated gross income is approximately 1 million per year, which is quite low, but it is advisable to start a business without hesitation. If Nuco starts the business early, the business might grow in the next 5 years and they could at least achieve 5 million approximately. On the other hand, if Nuco wish to claim for the allowance, they need to purchase machineries within 5 years, since the acquisition of assets will be given capital allowances if the assets fall into the ambit of plant, machinery or industrial buildings as stipulated under Schedule 3 ITN 1967. The allowances are given to the company in respect of a business resources if the company has incurred, owned, and use such qualifying assets in the business. If they start their business early, they will be able to invest into capital expenditure. Moving on to the next question, question 1C, the best tax incentives that can significantly reduce its tax liability after finished claiming investment tax allowance. State your reason. So since Nuco planned to expand its manufacturing business by incurring more capital expenditure, for example, buying more machineries and setting up new factory building, the best tax incentives is investment tax allowance. One of major tax incentives for companies investing in the manufacturing sector is the investment tax allowance. ITA is an incentive granted based on the capital expenditure incurred on industrial buildings, plant and machinery used for the purpose of the promoted activities or the production of the promoted products. This incentive is generally given for a period of 5 or 10 years. A company granted ITA is entitled to an allowance of 60% on its qualifying capital expenditure, which incurred within 5 years from the date the first qualifying capital expenditure is incurred. Depreciation is allowed for the assets, which helps in tax reduction. Not only that, machine tools, material handling equipment, robotic and factory automation equipment, and modules and components for machine tools, material handling equipment, and robotic and factory automation equipment. Companies undertaking activities in the production of the selected machinery and equipment are eligible for investment tax allowance of 100% on the qualifying capital expenditure incurred within 5 years from the date the first qualifying capital expenditure is incurred. This allowance can be offset against 100% of the statutory income for each year of assessment. Any unutilized allowances can be carried forward to subsequent years until fully utilized.
Assalamualaikum and good afternoon. I'm Nazira binti Kanilin. I'll be presenting question 2A, 2B and 2C. For question 2A, based on the situation, the machine will vote on 1st June 2019. Therefore, PAMCA should dispose its machines on 1st January 2021 or any other following months as long as it does not exceed 31st March 2022. This is because in order to dispose any assets, timing of sales is important to be counted. The tax authority has the power to claw back the capital allowance claimed in previous years and treat it as balancing charge in the year of disposal. Thus, to avoid the clawback of capital allowance, the 2 years minimum of ownership of assets is needed. Question 2B, PAMCA should postpone the decision to dispose the machine to the following year end. This is because PAMCA is now incurred current business loss, and it says that some machines are to be sold at loss. So, if stamping machine is disposed in the current year, it could result to balancing charge in which it will increase the tax liability. Hence, in order to save the tax on disposal of the machine, PAMCA need to decrease the tax liability by postpone the disposal of the machine to the following year end. Question 2C. Dalmo Group of companies are qualified as related companies under Section 44A subsection 3 Income Tax Act. Since PAMCA is a loss-making company, PAMCA can surrender maximum 70% of its adjusted loss to another related company for any year of assessment under Section 44A. From this situation, PAMCA can surrender its adjusted loss maximum of Rm 420,000 to Damchi since Damchi is the most profitable company. This is to prevent the adjusted loss surrender from exceed the Damchi defined aggregate income for the year of assessment as to fulfill Section 44A subsection 4. Therefore, Damchi can reduce its total income by Rm 420,000 in which it will allow to defer the tax liability of Damchi for the current year of assessment 2020. Apart from that, since PAMCO is expected to continue incur huge losses for the next financial year, PAMCO also can make use of this group relief under Section 44A for the next financial year of assessment 2021.
Assalamualaikum and good afternoon. I am Nur Hidayawati binti Muti. I will be presenting question 2D and E. For question 2D, it is better for one to purchase machinery by using long-term loan. This is because the capital's allowance will be based on the full cost of qualifying assets, and Uba will also entitled to claim initial allowance and annual allowance for the first year of purchase. Moreover, Ruba can reduce its tax liability since Ruba is claiming investment tax allowance in which Ruba entitled to get exemptions 60% of capital expenditures against its 70% of statutory income. For question 2E, Damchi should take over KYC Berhad by acquiring share as KYC Berhad has been making loss. From this aspect, KYC Berhad having a huge amount of unabsorbed loss. Therefore, the unabsorbed loss can be set off against the future business income. Thus, this will reduce of the tax liability for Damchi. On the other hand, if Damchi take over KYC Berhad by acquiring assets, the unabsorbed loss may not be transferred to Damchi. Thank you.